Is peer-to-peer lending still the Wild West, or has it transformed? Is it becoming a serious contender in the alternative investment space? Let's do some myth busting here.
Absolutely. I love this question, and I get this from new investors as well. Typically, they say, "What's the catch? What is it really?" Or "It sounds too good to be true." And what astounded me the most in this industry was the amount of repeat customers for the loan originators. I mean, it was upwards of 50% more in a lot of our loan originator partners and others in the industry I've spoken with. And that's huge to me. It's a very big thing, especially in growing markets. And when you start looking at more of the rural economies, or even in some of the bigger cities and others that don't really quite have the access.
Welcome to today's deep dive into the European peer-to-peer lending market. I'm your host, Effie Pilarinu, and today we are going to explore with my guest a financial services subsector that is quietly transforming from a narrowly considered investment option to a serious contender in the alternative investment space. Joining me today is Gerard Kostak, Head of Growth at Lender Market, a platform that has been at the forefront of this transformation in European peer-to-peer lending. We have regulatory frameworks that are maturing. We have more players entering the space. We have advancements in technology reshaping alternative investments. So there's lots going on, converging, and I'd like to welcome our guest. Welcome, Gerard.
Thank you very much, Effie. It's very exciting, especially when you put it that way. It's very nice to be here. I really appreciate you having us, or having myself join from Lender Market.
Now, let's be honest, Gerard. Everybody has this burning question, I would say, in their mind. Is peer-to-peer lending still the Wild West, or has it transformed? Is it becoming, as I said, a serious contender in the alternative investment space? Let's do some myth busting here if you want.
Absolutely. I love this question, and I get this from new investors as well. Typically, they say, "What's the catch? What is it really?" Or "It sounds too good to be true." And that's always something to be aware of. And I think in the early days with any industry, we look at the Wild West of new technology, new platform. It's exciting, and that draws to it a lot of risk. And I think a mixture of both experiment and failing companies, of where people lost out, and then also scammers and intentional misleading. And that's what people are very concerned about, typically the most. And I would agree with them. Know where you're putting your money, know what business it is, and how long have they been around, and how do they conduct themselves. And that's very important. And that's why we're very transparent as well. As an industry, it's been 20 something years, and definitely Wild West in the early days of people trying this and seeing scams. That we saw a lot of experimentation in the US and the UK, in Asia, China. And that's where I think a lot of things got worked out. And we saw a lot of the early giants essentially grow, P2P, and then even in some of those cases, look to get out of alternative and move into traditional finance, where several actually, I think, kind of missed the mark there, where they didn't keep up the like three pillars of stable business there, and they kind of lost sight of that. One of the benefits for the EU and EU platforms is not super late into the game, but being able to watch and understand and learn from that. And so the EU specifically has been positioned very advantageously to learn from those mistakes and build their platforms around the strengths of the P2P. And so normally people ask, what is the catch? And there isn't one. I mean, there's risk with everything, of course, but this is why we do extensive due diligence with our partners and present the information. And even in how we offer the investments or the loans and everything, they're all defined by their terms and all the information that is put forward for them. We're not trying to do any sort of just put your money here, don't worry about it. That's not what we're doing at all. And what we're looking at now is a much calmer, a much more stable and burgeoning market. I think there is still that Wild West frontier, and as with almost any industry,
Yeah.
uh, as new
Especially
technologies.
with alternatives. So you
Yes,
look at real estate, you look at crypto, there's a lack of transparency, or it's easier to sort of not disclose, and it's easier because it's complex, because it's over the counter. It's a part of this private market and not standardized, right?
absolutely.
And your focus on transparency, on regulation, on risk management, on operational excellence, all that is extremely important to be able to build trust around this is not the Wild West anymore. And maybe even looking at default rates of the platform if you want to look at statistics too.
Yes, absolutely. And that's why, as exciting as I want it to be, it's boring in that sense of, for people's individual investments and everything, we provide the data for them to either to do it themselves for their own calculations, to look at everything. We simplify it as best we can, but with fixed terms and projections, we try to make it as cut and dry as possible, and so people can understand and there's no surprises there. I think when we talk about the inherent risks and alternative investments, and we've looked to build around stability, and we look to build around transparency, and we look to remain evergreen in regulation, and we look forward to that and supporting the regulation, and it only benefits everyone the more transparent, and nothing is without risk, but try to mitigate the risk as much as possible.
Would you say, behind these peer-to-peer loans, there's always either a person, retail consumer, or a business, be it small, medium, or larger. Tell us a little bit about this human, if you want, story. Has this space over these, let's say, 2 decades, the last
Yep.
decade, has it changed human stories? Has it changed businesses, beyond the numbers, more around the human story?
Yeah, absolutely. I think if we went from one end to the other, and we'll start on our loan originator partner side over there of who they're doing business with, it's something I found very appealing and very interesting, specifically around the small business loans that they were doing, small, medium enterprise. And what we found, and they're providing business loans for either purchase of additional equipment or, one-time jobs. I look at like catering companies or agricultural or farm, and these are the smaller ones that need extra income or cash for these one-time events. What astounded me the most in this industry with that was the amount of repeat customers for the loan originators. I mean, it was upwards of 50% and more, and a lot of our loan originator partners and others in the industry I've spoken with, and that's huge to me. It's a very big thing, especially in growing markets. And when we look at, I mean, everybody's mostly developed, of course, in Europe, but when we start looking at more of the rural economies, or even in some of the bigger cities and others that don't really quite have the access or don't really qualify for going into the bank.
Based on the standards of a traditional bank, because they
Absolutely.
can't do the due diligence, right? So we all know that there is a big gap there, even in the developed world, right?
Absolutely. Yeah. And that's concerning. But what's been very cool about technology, the digital age, over the last 20 years, and I think the industry has grown with the technology, is two things. One, it gives us the access to do these things for those of us, or for those people that are knowledgeable and comfortable with technology. But what we've really seen in the last 15 years is a great simplification of it, a great open access in digital in general, and then finance, and then P2P specifically, which is something that we do at Lender Market. We really look to open the product up to be accessible for everybody, keep it simple. We want it to be accessible for everyone. And then so going kind of back to the humans on the other end of who's taking these loans for the loan originators, successful business, small businesses who want to grow. And then one of the things there too, especially for our partners, the loan originators, that they like to see, which is kind of funny, they also like to see those businesses grow out of their business as well. And that's actually a really cool thing. I don't tend to name who says what of our partners, but multiple, we've talked about this, about some of their, go ahead.
So what is that all about? Helping small businesses grow?
Yes, absolutely. That's the helping small businesses and helping transform, an economy, or in some cases, contributing to, the national economy. If we look at, even some of our LOs on the other continents as well there. So what they like to do, or what their mission statement is to take those people that don't quite have the access, give them the access, fair access. They still obviously do their due diligence and do right as a business and themselves, RLOs, and provide that so that they can grow their business. And then so on that side, you have the kind of the very end user, or the beginning of that small business owner who's growing, who wants to grow their business. Or on that side, you have the small business owner who wants to grow their business and is found opportunity to do so, and then they qualify in that state with the LO. Then for the LO themselves, our partners, one of the things at Lender Market is very important to us is doing good business, but what is their business plan? Are they in a state of growth? Do they have a track record of success? What is their due diligence with their customers? What is their mission statement? What are they looking to accomplish? And so that next stage in the process with the LOs, as we bring them on board, we're looking for very qualified and productive investments for our investors. As we do our due diligence and meetings with them, that's always one of the things in my mind is, would I, as an investor, want to do this? What would our investors, would they be happy with this, with how they're conducting themselves, and what are they like? And so
There's a qualitative aspect to this beyond the numbers.
absolutely. Every conversation we've had, and what I've been very thankful for at Lender Market is we're set up and we've been successful and stable enough and long enough that we're very selective about who our partners are. And that's kind of a rare commodity to have in business.
Yeah,
It's
yeah.
it's not the take all.
Gerard, for our listeners that are not familiar with the Lender Market platform, let's briefly talk about the platform and what it connects, because we've been talking about small businesses,
Absolutely.
about retail investors, about loan originators. Give us just a brief outline of what this platform, the ecosystem, who are the players, and what you're connecting, and then let's talk some numbers too.
Absolutely. Of course. So Lender Market is a P2P platform, typically in the P2P industry, like I had mentioned earlier, or what people normally think of as individual to individual. And then that branches out into multiple niches. In the industry, you have could be projects for real estate that people are investing in, or individuals themselves. And then for our case in particular, we do business with our investors who are both individual investors, sophisticated and non-sophisticated, so very beginner investors and very well-seasoned investors, both from smaller portfolios to much larger portfolios, as well as business, or the institutional investors is there.
Yeah.
So we have everything, even on that side, from small business all the way to investing houses and things of that nature that are.
And where do loan originators fit in? How do they fit in on the platform?
Absolutely. So we partner with the loan originators, and we do our due diligence of business plan, results, track record, what's going forward, and then regulation is the front and foremost. As far as, are they regulated? That's the very first step with anything, and for us as well, is making sure that we're as regulated as possible. Then it's the same for them, regardless of what country they're from. And being those that are in the EU, it can be a little easier that way. But we have fellows both North America, South America, but quite a few here in Europe. And so our investors currently, we have our doors open to everybody, that mainly from the EU, the continental EU at this point.
Yeah. Let's talk about the overall market. From what I understand, European peer-to-peer space has experienced double-digit
Mhm.
growth. Can you talk to us a little bit about the factors that have contributed and maybe some numbers?
Yeah, I think there's been a lot more data starting to come out with the early regulation, the European crowdsource funding regulation in the last few years here. In the last 2 years, we've seen a big push for regulation, and I was looking at some of the numbers where there's, I think, hundreds of platforms out there who've applied for licenses, but only about, I think, 60% of them are actually conducting business and doing it. There's a lot of interest out there, and people, they're not early at this point because it's been about 20 years here. And so they're definitely hedging their bets, and then they're seeing a good opportunity to get in from the business side. Where we on the EU mainland specifically, I think, have taken the biggest advantage is watching it, like I had mentioned earlier, with starting in the UK and pioneering it. I want to say I think they already went through the billion funded mark in the early 2000s, and then what we're looking at now funding wise is, hundreds of billions. For us, we just passed our half a billion mark. We've been trading for 6 years at this point, which would be considered a much older business. So one of the interesting things about the peer-to-peer industry is when we look at like current financial markets or geopolitical situations, this industry tends to be almost evergreen. So when you look at, like, we had the pandemic, and then the recent invasion of Ukraine, there was a big jumble in the market and many markets in general. And we saw some adjustment there on our side. We did a much overdue relaunch, and we found ourselves to grow at a 22 times greater rate than we did with our initial launch. And so what we're finding is, in times of economic downturn and interest rates going down, we find, when the banks and everybody seems to tighten up, the industry for us still stays strong, especially on the available loan side for like our loan originators. They end up doing more business that way, right? When the banks tighten down. And then when the economy goes really great and we see everything start to rise, and then we see in traditional finance or traditional banking and everything there, they also start to tighten their reins and get a little bit more picky about who they're doing business with. And that, even in that case, brings in, on the loan origination side, a lot more qualified and much more money on that side. Now, both for our investors, it's relatively the same as well. And so those that find a good opportunity, or those that are consistent in their investment and their long-term view, look to, when the economy goes down and they see that opportunity, that they'll tend to go in big there. And then when it goes up, everybody has more money or extra, and they're looking for something to do with it, right? And so
So can we
typically,
say that this is an all-weather type of space that
I would
is more resilient than other, or its volatility is less?
very much so. I would definitely say that. I don't know if anybody would yell at me for officially saying that, but it is interesting for us specifically when we look at the terms. And then for lender market, one of our draws is, for the loans that are on our platform, a much higher interest rate. We have everything from up to 10 to 18%. Those are fixed, and they're not going up and down with the market.
And what terms are we looking at in terms of terms to maturity?
Yep. So 30-day, everything from, we have a smaller portion or a reasonable portion of 30-day loans all the way up to 3 years. 30 days, 6 months, 12, 3, and we're kind of expanding that. So, and there's a spread on interest rates there as well. And so we have a pretty healthy mix there. It's not just everything in one basket. And so that takes people all through the fluctuations.
I understand. And then in terms of the kind of risk return profile, here we're not talking about hot money, so to
Right.
speak, right? We're not talking about coming in for a flip or a faster return, like in other alternative investments that might be the case. Why would you say that what we call smart money would be coming into this space? How are they thinking that peer-to-peer fits into their portfolio allocation?
Absolutely. It's a great question. I think depending on the investor, peer-to-peer fits for the seasoned investor who has a larger portfolio, who is across many different instruments. P2P becomes just one of their portions, right? And so they'll divvy a portion into it. In some cases, they'll pick a platform that they're very much into, and this is where they put it, or they'll divvy it across all. Like I said, some are in real estate, and we're in a much more stable scenario. And in fact, with some of our investors, I tend to kind of make the bulk with us and kind of experiment with, in some cases, or denote a portion for experimentation, because where they're solid. Now, it can be one area for investment or part of the bigger group. We always want to encourage people to diversify. We always want to encourage people to make sure that they're comfortable with what they're doing. There are those that are looking for the quick flip, and those that are looking for, it's digital technology, it's new, I want to catch this gold rush, so to speak. I would argue P2P is not necessarily the place for that. And I would argue that lender market is more about long-term growth, stability, compound interest is where you're going to really make the difference. One thing that I was actually thinking about this morning too, when we talk about the digital age and this question, I think historically with investments and business, and we look at, generational behaviors, it's tended in the past to be the more experienced and older generations that understand it's about the long term. It's about putting in, yearly, monthly, and we see a lot of that.
Staying in the market with a consistency. And there's a wonderful video and book now that is out there asking the question, where are the missing billionaires? Because if you look, back 50 or 100 years, if you'd stayed in the markets,
Yep.
we'd have many billionaires, but people don't stay in the markets consistently, right? And that's where the problem is, and we understand that. Gerard, I mean, you mentioned technology, and definitely the peer-to-peer lending market platforms have been using technology for due diligence, for onboarding, for everything, right? But what about the new advancements in AI and the automation? How is that transforming the peer-to-peer space, or what do you expect to see as we speak? Because everything's changing on a daily basis, right?
Absolutely. I think in the forefront, it makes it possible. So especially now, I think when we think of AI and we think about that being the new frontier, and we think about, autonomous entities digitally going out there and doing stuff that we don't know.
Agentic. You're talking about agentic more than LLMs.
Right. Absolutely. And so, and I know there's a lot of concern around that. For us, AI for us actually is auto investment. And then the digital capabilities for our platform to manage at scale the amount of loans and transactions and interest and calculations it's not fathomable. It's not so complex that we can't think about it, but you can't do it on paper anymore. And this is actually one of the things that was not necessarily blew my mind, but we see it at times. So when we bring thousands upon thousands of investors who can come on and they can all invest in one loan, or they can invest across many loans at differing times of that loan's term, all the way up until, almost the end. And the calculations of that, the timing and the calculations and the processing, the payments and everything. I mean, we have a pretty awesome mid-size team of tech folks who are building that. And we put a lot of time into that over this last year of building this platform so that we can handle that moving forward in the future, so we can handle the growth. And what technologies do we bring on, whether that becomes new products or new markets. And so what we do see for us, we're not necessarily looking to bring in the most advanced AIs or like we're talking about at this point, because there's no need for it for us. And I think if there becomes one and it becomes a value to our investors or to our strategic partners, the loan originators, then by all means, I think we will. But I think what people don't see in the boring platform is the complexity of what's going on.
Complexity, I mean, this is an over-the-counter market with no standardized terms, right? Loans, all sorts of different covenants, and just the mere nature of this market is very different than, when we're thinking about the advancements in AI, when you have a portfolio of publicly traded stocks or other bundles like ETFs and so on. So this is clearly a major difference. Tell us a little bit about the socioeconomic impact of the activities on the lender market platform. I mean, we've spoken about business lending for small businesses, microloans, but tell us a little bit more, because I know that lender market has a very unique stance in the way they're doing business. If I dare to say, it's more of a purposeful business within the peer-to-peer lending space. So tell us about that.
Absolutely. For this,
Brag. I want you to brag.
absolutely, of course. Well, it's definitely something we speak to a bit, but democratizing or bringing financial opportunity to everybody in non-traditional banking is a very big thing for all of us here. And it's one of the things we always keep in mind when we think about our investors, our platform, our product. We want to bring the ability for people to make money, put their money to work, and to provide, in that sense, even wealth building for either their peers or their peers even within their own country or within like the EU itself specifically. Being open to everybody is a huge thing. There's no reason in this age anymore that it needs to be something that only established financial institutions, or established is probably not even the right word, but legacy is probably the better word for it. So those that I think in some ways are looking to build borders around their institutions and their industry, especially now, because they see that with the digital age, we can all participate in this. And the only reason we haven't before, I think, is for most of us, we have, I say normal lives, but everybody's life is not normal, so to speak. We're all doing family, work, our own things. There's so much. And so for a lot of people, dedicating so much time into even just figuring out how to invest or figuring out what's the right investment and how do I not become one of those statistics of those groups of people that got duped or something of that nature. So socioeconomically and bringing access to everybody, that way we can all benefit from it. This is really the future I see, and it's one of the good things with regulation, and it's one of the reasons we also look to encourage everyone to participate and learn a little bit more about where these are going. One of the things that I think we're very thankful for around crypto and these new technologies is really blasting a path, right? Really making it kind of a household names and household, discussions about digital finance, about how does this work. And so for us at this point, we support that and we support everything, whatever that new turn is, but we're keeping it very simple and we're keeping it very basic. And there's no need for us to get very crazy with it. Like I said, I always kind of think about, what would my family do? What would my mother, she's in her late 70s, and could she come on and do this? Would it be beneficial for her? Does this make sense? And all the way to, my own nieces and nephews who are in their late teens, early 20s, university time, and all of that.
Should they
And
start investing in that space?
absolutely,
Yeah.
absolutely. And is it accessible to them?
Gerard, it's very interesting what you mentioned, that alternative investments like crypto have popularized and made it easier for the hoi poly, lots of people to understand that technology is evolving and it is shaping investment alternatives. And of course, due diligence is needed in everything, but that's helping even the peer-to-peer lending market, where one can understand in a more simple way the socioeconomic impact, because we are helping the small and medium businesses, because we are helping even individuals with microloans, and on the other hand, with wealth building. Tell us a little bit about how the European regulation has contributed and helped in this. What are the sort of latest that have helped to open up this market?
Absolutely. So within the last few years, they did the right thing. They started with starting to lay down frameworks of regulation, what it's going to look like, and they gave the industry a few years chance to start catching up and start getting licensed, so to speak. And so the framework itself allows for the platforms to work, internationally within the EU with a minimal amount of friction, so to speak, right? And because there could be differing regulations and laws by country, it's a new industry. So I think it was the right thing to do of starting to lay this down. One of the strong points of it, I think, for everyone is in general, you can infer that and it's stated this way in some cases, that everyone should act as a regulated financial institution, regardless of if those laws technically apply to you or not. And this is one of the guiding, principles for us, in that sense. There's no need to really go outside the rules or loopholes or anything there. Regulations there for protection. And so I think in our case in particular, one of the things we found was we've already built the platform and how we present ourselves and how we conduct business around transparency, around fairness, around risk mitigation as best we could without being required to do so. That's what people have grown accustomed to or expect from where they're going to invest their money or who they're going to trust their money to or to work through. And so for us, it really hasn't been it's not that difficult because we've built everything around it. And so I think that the main tenets are transparency, risk mitigation, and then really helping the investors or being clear about them understanding what they're getting into and all that and what the risk is.
Yeah. If we look into the future, let's say 2030, everybody likes to look at the
Yeah, of course.
2030, right? Can you see peer-to-peer lending becoming as normal as ETFs and claiming a position, a solid position, either in the fixed income
Right.
allocation or in the alternative space allocation? And we all know that the 60/40 traditional portfolio is really, I mean, it's been a guideline. Maybe nowadays it's not even the right way to think of it. We're starting to think of increasing allocations in alternative assets, big asset managers like BlackRock shaping that narrative, be it with private investments and shaping the narrative of increasing allocations for alternative assets to 10%, 20%. Can you see that peer-to-peer lending really evolves, as I said, 2030?
Yeah, absolutely. And that's a great point too. I think a portion of the industry kind of anchors that stable area of it. Our business, our model really anchors that transparent, consistent. And I think we'll also start to see even more alternative, even more unique things pop up. The industry as a whole is now starting to become so mixed, and even in itself, it has its almost primary and alternative. And to your point, very much so, the alternative and traditional, very easily, I think, in the next 20 years, in itself flips 60/40 this way, depending on what the markets are. I think soon gone are the days of alternative means, very high risk. I think we'll see an entirely different mix in the landscape. I don't like the projections of where it's going to be entirely new, but I think you really hit it on the head, is that we're going to see the center mass, so to speak, start to move over much more so. And then we see that as well reflecting in even our own investors' demographics of when we talk traditional finance, they have a certain more experienced generations of that. And we see the younger ones now of both young women and men in their early 20s really coming in and not just those in the upper echelons of society, because the barrier to entry is so low and the access is there. And everybody, really, as a whole in society, has the ability to educate themselves so much more than they used to. And that's huge. So 20 years, I think investment and the discussion around where your mix is at and what your portfolio looks like really becomes more of a commonplace conversation, and not so much just even in niche in itself.
Yeah. So we spoke about access, we spoke about transparency, the capability to do due diligence for do-it-yourself
Mhm.
investors, the increased comfort coming from the regulations that are maturing. All those are converging to really benefit both the investors and the businesses that need this funding. What about the cost of investing? We didn't touch on that. And that's a big topic because, in the traditional fintech world, a lot has been done, and new businesses have been built on the premise of, okay, we'll offer you access and it will be cheaper and more efficient. Where do we stand there in the peer-to-peer lending space?
Absolutely. It's funny you mentioned, because I just actually was looking at some strategies or new things, and there's now strategies around getting around fees and all that. And it's so crazy to me. And it rings true to me. It also drives me crazy. If you're trying to invest, you're trying to make money or to build wealth. And then now, but you have to think about gaming the game for fees and systems in that sense. In the P2P industry, in the very, very early days, I think it was very low entry. But with everything, everybody always looks for a way to, or a reason to upcharge. So you'll see a mixture in general on the both sides, the investors and then the recipients paying fees and percentages. And some platforms really start to try to turn that profit and charge for almost every step of the way. And that's fine. It's their business to do so. For us, the investors themselves, we don't charge any fees to. We don't want to kind of make our money off of them, so to speak. And that's probably not quite the right word to put it, but there's no fees for our investors. We do charge, or the cost does come on for the loan originators there. And so this is a pretty normal process, or a pretty normal way. So for them, they're paying a percentage because of they're getting loans funded in there, and we're looking for our investors. That's not, and so currently we don't charge anything to our investors. We don't plan on doing that anytime in the near future. I think at some point, though, and with technology and research, there has to be a cost for some things, right? And so everything can't be, yeah, free. And so we as a company take a much smaller percentage or cut, and we pass all that on to our investors on purpose. We have the highest interest rates, very strong partners, and we look to generate wealth for our investors. So currently our business model, there are no fees, and I don't see, especially for normal functionality and what you would want to do and what you would expect from a platform, I don't see us charging for that anytime in the future. When it starts to come to, and this is the one thing I'd like to educate people on, the research and development and the upkeep of certain things. Like if you talk about, we don't currently have a secondary market, and we may have a version of it in the future, but that in itself is almost an entirely new platform. It's an entirely different team and running it and all of that, even though it may just be a support function, or be looked at as a side access or something on the main platform. And so in particular cases like that, it would make sense to essentially share costs on that.
Yeah, I can see that evolution. We're right now at the stage where we're still focused on this over-the-counter market and the challenges that it has and the opportunities, because as we said before, it's non-standardized and you need to provide all that due diligence and do the matchmaking. But the secondary market is a whole different thing, and it's under the umbrella of using technology to blur the lines between public and private markets, right? That's the first step, creating a secondary market, which is a major challenge. Gerard,
Absolutely.
in closing, is there one thing that stands out that you would want and you're a seasoned peer-to-peer investor to know or to keep in mind at this day and time, at this macroeconomic environment, in this technological era, in these conditions, if you want?
Absolutely. Well, stability. I think stability is here, and dare I say, boring. I mean, we all look and get excited for new things, and we want to get very very flashy. But I don't want to. I don't want to bring anybody down, but look for the boring, look for the stable, look for consistency over time, and then compound interest is your friend, as we all know. So even though technology is brand new, you still stick with the basics, and this is what we're doing in the new age. And so get excited, join the huge crowds that are coming in, and then build slowly over time. I mean, that's it.
Yeah, time is our friend. Compounding is a timeless principle that will never go away, whether we are on blockchain rails or tokenized, or we get rid of money as we know it today. It's that principle will never go away, right?
Absolutely not. That's the one thing that always stays true.
Thank you so much, Gerard.
Thank you very much, Effie. I really appreciate it. It was a pleasure talking to you today.